Usually when you flip on the financial news, you are just immediately assaulted by this expectation of chaos.
Oh, absolutely. It's curated for that exact visceral reaction.
Right. You get the red numbers flashing across the bottom ticker. You have talking heads shouting about the sky falling or, conversely, celebrating rockets launching to the moon.
It's all very binary.
Exactly. A very binary presentation. Boom or bust. Complete panic or absolute euphoria.
Because they know we naturally crave that immediate categorization. We want to know unequivocally if today's a good day or a bad day in the markets. We want the neat label.
We do. But then, if you actually step away from the television, you grab a cup of coffee, and you look at the raw technical charts, which is what we are doing today on this deep dive, the story changes.
It changes completely.
Yeah. So just to set the scene for you listening at home, today is August 10, 2026, and we are looking at a fascinating stack of raw, unfiltered data from TradingView and Investing.com.
Right, specifically focusing on the Pakistani stock market.
Yes, the Pakistani market. And let me tell you, when you look at the actual diagnostic landscape, that binary news feed starts feeling, well, completely useless. The reality of the market isn't boom or bust right now. It is incredibly murky.
Murky is a great way to describe it. I mean, we are looking at the absolute definition, a deceptive surface that is masking a highly complex undercurrent.
Which is exactly why you are listening to this deep dive right now. You tune in because you want the signal, not the noise. You want to get smart quickly on how to read these undercurrents without, drowning in information overload.
Right, because if you're only checking the top-line summary today, you're walking away with a fundamentally flawed understanding of the capital flow.
Exactly. So today, our mission is translation. We have the data for the Karachi Stock Exchange, the KSE 100 index, along with 5 specific equities. We're going to decode the squiggly lines.
The price action, the RSI, those momentum oscillators.
Right, all of it.
Yeah.
We're going to translate these technical indicators into a clear story about market momentum, separating the slow and steady climbers from the absolute rockets.
Because beneath the very sleepy, broader market today, there is a brutal tug-of-war happening.
So let's start with the macro picture. The big numbers for the KSE 100. Right now, the index sits at 181,310.28. And if you checked your phone this afternoon, you'd probably yawn.
Yeah, you'd think nothing happened.
Literally nothing. The market is essentially flat for the day. It's down a microscopic 0.07%, which is about 120 points. Virtually zero movement.
But you can't view today in a vacuum, right? That flat line today is just the tip of a very large iceberg.
Okay, let's unpack this. What are we missing when we just look at today's flat line?
We have to zoom out. Look at the 52-week range. This index started all the way down at roughly 144,119.
Wow, okay.
Yeah, meaning the one-year change is a stellar positive, 24.71%.
And really 25% in a year.
Exactly, with a year-to-date gain of 4.17%. That is a massive longer-term macroeconomic victory for the index. So a flat day today isn't a sign of weakness.
It's more like digestion, right? But I want to challenge that interpretation just a little bit.
Sure, go ahead.
Because when I look at the 4-hour chart for the KSE 100, I see a nice recent bounce off a price floor around the 107K level. But right below that price chart is the stochastic RSI indicator, and it is sitting incredibly high.
Right, hovering up in the 80 to 85 range.
Yeah, so to me, this looks exactly like a mountain climber who just scaled a massive cliff, that 24% yearly gain, and is now setting up base camp to catch their breath. The high Stoch RSI means they're a bit winded.
That's a really good analogy.
Thanks. But my question is, when an entire index is overbought on a 4-hour chart like that, is that a warning sign of a cliff edge, or is it just a healthy pause?
It's a healthy pause, but the mechanics of why are crucial. You have to differentiate between sheer speed and exhaustion. In a powerful upward trend, which a 24% gain undeniably is, that indicator can stay pin high for a very long time.
So an overbought signal above 80 doesn't mean the market has to crash.
Not at all. It simply tells us the buying momentum is pervasive. But you're right to point out the flat price today. The market pushed hard off that 170K level, and now it has encountered a zone where the buyers and sellers are perfectly matched.
They're just canceling each other out of base camp.
Exactly. It's a resting phase.
Okay, so if the overall market is resting at base camp, what are the individual climbers doing? Because they aren't all just sitting in their tents. Let's zoom in on 2 major legacy giants to see how they are navigating the terrain.
Right. Pakistan State Oil and Pakistan Telecommunication Company.
PSO and PTC. Let's start with PSO. The stock is at 353.49, up a modest 0.28%.
Very modest.
Yeah. And when I look at its 4-hour chart, it feels incredibly relaxed. It's trading predictably inside this defined upward channel, bouncing nicely off support.
And look at its standard RSI. It's sitting right around 58.
Which is pretty comfortable, right?
Very comfortable. The 50 mark is completely neutral, so sitting at 58 means there is a gentle, sustainable buying pressure. It isn't overexerting itself, it's just coasting nicely.
Okay, so PSO is coasting. But then we look at the other legacy giant, PTC.
Yeah, the internal mechanics here are completely different right now.
They really are. PTC is trading at 72.50, up 0.47% today. Also in an upward channel, visually similar to PSO, but its engine looks entirely different.
Right, the stochastic RSI for PTC is scraping the absolute bottom.
It's incredibly low, way down between 15 and 33, which means it's oversold. And here's where it gets really interesting for me.
How so?
Well, PTC's price is going up, right? But its indicator says it's oversold. Doesn't oversold imply people are dumping the stock? How can it be climbing if the momentum indicators are at the bottom of the barrel?
It seems like a paradox, doesn't it? The price goes up, but the momentum says everyone is selling.
Yeah, the math doesn't seem to math.
But this is actually one of the most fascinating setups in technical analysis. When an indicator drops that low, to 15, it means there is intense aggressive selling pressure relative to recent history.
A flood of sell orders.
Yes, but look at the price. The sellers are throwing everything they have at PTC, and the price is actually creeping up.
Because the buyers are absorbing it all.
Exactly. The low stochastic RSI, while the price remains stable in an upward channel, means it's like a coiled spring. Institutional buyers are sitting there with limit orders, acting like a concrete dam, just quietly absorbing all those shares.
Wow. So the indicator registers the heavy selling, but because the buyers eat it all up without letting the price drop, the momentum exhausts itself.
Yes. And because of that, PTC has plenty of technical room to move higher before it hits the overbought territory that the overall KSE 100 is currently experiencing.
It's primed. It flushed out the weak hands, and now it's a coiled spring.
Perfectly said.
So we have PSO coasting along and PTC coiling up. But while these legacy stocks take their time, another corner of the market is absolutely sprinting today. Let's look at the breakout stars.
Ah, the TPL group. This is where the real intraday volatility is hiding.
Yes, the momentum rockets. Let's look at TPL Corp first, ticker TPL. This stock is having a massive day, up 4.79% to 22.74.
And it's accompanied by huge volume bars on those up candles.
Towering volume bars. And it's pushing against the very top of its upward channel. Its RSI is getting warm at 73.
Which tells you this isn't just retail traders playing around. That kind of volume confirms heavy institutional capital is stepping in and buying aggressively.
But as aggressive as TPL is, it looks downright conservative compared to TPL properties.
TPLP.
The TPLP is even more extreme.
This chart is violent. It's trading at 15.60, up 0.97%, but the chart shows it has just violently broken past historical resistance lines at 13.69 and 15.49.
It just smashed right through them.
It did. And the RSI is 79, but the stochastic RSI is at a screaming 96.58.
It's pinned to the ceiling.
Okay, this feels like Icarus flying way too close to the sun. I mean, if an indicator goes up to 100 mathematically and TPLP is sitting at 96, aren't we basically guaranteeing a wax-melting plunge for anyone buying in right now? See, in a normal range-bound market, buying at a 96 stochastic RSI would be a terrible idea. But this is a crucial lesson about technical analysis. Overbought does not mean sell immediately.
But the rubber band is stretched to its limit. Doesn't have to snap back?
A rubber band snaps back because it's anchored to something, right?
Right.
Well, when a TPLP violently broke that 15.49 resistance line on high volume, it destroyed the anchor. There is no more historical resistance directly above it.
Oh, wow. So it's in open air.
Exactly. In a true breakout, momentum indicators can stay pinned to the ceiling for a long time. It enters a phase of price discovery. The market literally doesn't know what the stock is worth anymore, so the price just runs.
So the indicator just stays in the 90s.
For days, sometimes weeks. And this highlights a really intense psychological battle in the market.
Between who?
Between momentum traders and value traders. The momentum traders see the broken resistance, they ignore the overbought indicator, and they buy the breakout. Because the trend is their friend.
And the value traders.
The value traders look at that 96 stochastic RSI. They assume the rubber band has to snap back, and they wait for the pullback. They sit on their hands.
But the pullback doesn't come.
Exactly. Or if it does, the new floor is much higher. They end up missing the run.
That is fascinating. Okay, so we've seen the sleepers, we've seen the coiled springs, and we've seen the rockets flying into open air. To round out our portfolio view, is there a stock that sits perfectly in the middle?
There is. Gondora Tire and Rubber, ticker GTYR.
Let's pull up GTYR, trading at 35.0, up an entirely respectable 1.16%.
This is the most textbook chart of the entire stack today. If you were teaching a class on technicals, this is the chart you'd show.
The Goldilocks chart.
Precisely. It's in a perfect parallel upward channel, just a beautifully functioning machine.
And its RSI is at 57, which is
right in the middle. It's not overbought like TPLP, and it's not oversold like PTC. It is just a steady, balanced grinder.
So what does this all mean for you, the learner? If you only looked at the KSE 100 index being down 0.07% today, you'd think nothing was happening, right?
You'd assume the market took a nap.
Exactly. But GTYR proves that underneath a flat index, there are these beautifully functioning, steady gears just grinding away, making money.
It really emphasizes why you have to look under the hood.
So let's synthesize this whole deep dive.
Yeah.
The Pakistani stock market on August 10th, 2026 is basically a story of a resting macro index. It's up nearly 25% on the year, but it's pausing today.
But that pause is masking wild microaction.
Wild action. We have coiled springs like PTC absorbing supply. We have momentum rockets like TPL and TPLP breaking resistance and flying into open air. And we have steady textbook climbers like PSO and GTYR.
And that's the true value of a deep dive like this. You have to remember that technical charts are just maps.
Right, they don't predict the future.
No, they don't, but they tell you exactly where the players are positioned on the field today. They help you avoid that information overload from the news by letting you focus on the actual, undeniable trends of capital.
They tell us the what and the how. We know exactly what the price and momentum are doing today. We know how the buyers are absorbing selling pressure on PTC.
But charts never tell us the why.
Exactly. And that is the provocative thought I want to leave you with today. What invisible macroeconomic forces in Pakistan right now are driving property and corporate stocks to break out violently while telecoms coil up and the broader market just takes a nap?
It's a huge fundamental mystery.
It is. And that fundamental mystery is something for you to explore next time you read the financial news, because the squiggly lines show you where the money is moving, but it's up to you to figure out why. So keep digging, keep questioning, and we'll catch you on the next deep dive.